I just wanted to get all the way down to basics. What is a short sale? There are a lot of people who have heard that term who have absolutely no idea what it means. So I thought maybe we would start at the absolute basics and just discuss what a short sale is for today's episode. So you may have heard the phrase that that person has negative equity in the house, that they're underwater, that they're upside down. These are all situations where the person owes more on the property than the property is worth. And when you factor in the closing costs involved in selling that property, they're in a situation where they cannot afford to bring the amount of money to the table that it would take in order to pay the bank back the actual amount of money that they're owed. And in some cases for our sellers, that amount of money can be tens of thousands of dollars, in some cases over hundreds of thousands of dollars. So most people don't have that kind of money laying around, especially in today's economy. And a big question that most people are asking themselves is, should I even try to hang on to the property, or should I let the property go? And really, it's a lot of unfortunate situations. The number one reason for foreclosure in the United States, certainly not the only reason, but the number one reason is job loss. And when we see unemployment, close to 10%, and if you want to factor in real unemployment, certainly the numbers are even higher than that. There are a lot of people who don't have jobs, who can't afford to make the payment on the property that they currently own, and just have to find another solution. Or maybe they've been relocated to take a job in another part of the United States. It's very difficult for most people to afford maintaining two households. So one of the options for people that are in that situation is they have to look at what is a short sale and whether that's a good fit for them. So as prices continue to fall in this area, I'm often asked what I see happening here in the next little while, and should I just hang on and wait and maybe things will get better. This is something that's going to affect more and more people that you know, your neighbors, your friends, your relatives, your coworkers, family members. This is a big deal. We have not seen prices stabilize yet. We've seen them stabilize briefly with things like tax credits put out by the federal government, but that was a temporary solution to what is a long-term problem. And right now there are still thousands and actually millions of properties that are in foreclosure or are headed to foreclosure. Lenders are trying to estimate the number of properties that are likely to go into foreclosure. They have their little formulas, and that number is often referred to as shadow inventory. And some experts are actually guessing that shadow inventory in the United States is roughly 4 million homes. To put that number a different way, even right now nationally, and again, this number could get worse because in lots of areas inside the country, we're seeing prices continue to fall. In fact, Case-Shiller, who does a study on a regular basis to see how homes are appreciating or depreciating, Case-Shiller's report says that only 3 out of 20 major metropolitan areas saw an increase in home values. So that means 17% or 17 out of all 20. So I don't know what the percentage on that is. I hadn't done the math before I started taping this, but I can tell you that it's a big number. Right now, even before prices continue to fall any further, most experts gauge the number of homes that are owed on more than what they're worth. So underwater homes, negative equity homes, whatever you would like to call them, at roughly 40%. 40% of all homeowners owe more on their property than they could possibly sell it for and cannot break even. And if you factor in the costs involved in selling, many say that number would be even higher, because again, a lot of these experts will take the numbers and they'll bend them to their own purposes, and that 9% that it costs to sell as a rough number is not figured into that calculation. All they're figuring out is, does the person owe less than what the property is worth or not? They don't factor in that extra percentage. So another question that often comes up when we start to talk about short sale is, why would the lender take less than what they're owed on the property? And as you might guess, if you've ever dealt with a bank, banks are all motivated by the bottom line. And quite frankly, it costs less for them to short sale a property than it does for them to foreclose on a property. Estimates are roughly 20 to 25% better financial outcome. So in other words, they'll lose less money. And that number, again, total losses in a short sale, typically about 80%, 75% of the losses that they would have in a foreclosure situation. And lots of people are under the idea that that is a situation where the lender's costs and legal fees are the driving force of that, and that's really probably not the case. It is actually the holding costs of those foreclosed properties, getting ready for the market, trying to stabilize the market. What a lot of lenders are doing is they're actually holding on to the homes that they foreclosed on. Number one, because they're incredibly overworked and they don't have enough people to liquidate the properties. But secondly, the other reason that they don't get these properties to the market right away is they realize if they were to rush all the properties that they have that are in foreclosure or have already been foreclosed on to the market, brought them all to the market at the same time, all they would do was further undermine home values. And obviously that's the last thing that they want to do in their situation. So holding fees are often drug out for a long period of time. And in a declining market, you might make an argument that that's actually not in the bank's best interest, especially if you factor in that right now, locally speaking, we're losing about 1.5% to 2% a month on home values here in the Snohomish County area. Obviously, the statistics for where you are might be slightly different than that, but those are pretty staggering numbers, and they do vary by place to place. And if you have an area nearby that you'd like me to run numbers on, I certainly would be happy to do it and discuss that with you. But it's not hard to see if it takes the bank 6 months to bring the property to the market and they're losing roughly 1.5% to 2% a month, that could be another 10% loss in home value that short sale may be able to avoid. And so they have figured it out that short sale is generally a better option because the homeowner stays in the home is more secure, and the home is less likely to get vandalized. And they don't have issues like winterizing the home where they're turning the water off, shutting down all the systems. And insuring a home that is vacant is extremely expensive, and it really is a high risk situation for the banks. And they definitely want to avoid the asset being damaged by mold, by vandalism, those sorts of things. Those are all big issues for banks. So the point of today's video, the number one thing that I would like you to get out of it, obviously I'd like you to understand what a short sale is, but more importantly, what I'd really like for you to get out of this is that you would develop a plan to be proactive about your situation, whether it's your personal situation or somebody that you know. The number that is absolutely staggering to me is that 9 out of 10 people who lose their home to foreclosure never contact the bank. And whether that's ostrich syndrome, where they're just sticking their head in the sand and it's absolute denial, or whether it's shame. I think a lot of people are afraid or ashamed to admit that they're in a situation where they could not afford to keep their home. And there's some embarrassment around this issue. And quite frankly, there shouldn't be. When there are 40% of America's homeowners that are underwater or owe more on their home than their home is worth, why in the world should anyone be ashamed of the fact that they lost their house to foreclosure? It's not something that you want to beat on your chest and go, look at me, I'm proud of this. But at the same time, you shouldn't let your fear scare you into not taking the proactive steps that would be helpful for the family living in that home, whether it's yours or someone else. I think a lot of times we could reach out to people and help them find their options. And one of the later videos that we'll be doing will definitely be knowing what your options are if you're facing foreclosure, knowing what your options are if you're not facing foreclosure, but you're in an upside down situation where you owe more on the house than what the house is worth. Those are definitely a couple episodes that we'll be taping later on, not on the website yet, but hopefully will be very soon. The other thing I just want to caution you about is there are a lot of people out there that are trying to take advantage of your situation And we definitely want you to avoid scams. There are a lot of scammers out there, quote unquote investors, who would be delighted to take advantage of your situation and come up with a scheme where they could actually benefit from something that is painful and financially devastating for a homeowner looking at foreclosure. So we definitely want you to be both proactive, and we want you to be a cautious seller who looks at all the options and knows their options and is aware of what scams to avoid. And again, scams are going to be a completely separate video. Just don't have the time to do it on this one. Certainly encourage you to tune in and check out our video on scams. Thank you so much for taking the time. I know that you probably don't have a lot